In today's show, Jack Dorsey and Twitter are developing a decentralized standard for social media. Jack took to Twitter a series of tweets. I'll read the first one here in the intro. Twitter's funding a small independent team of up to 5 open source architects, engineers, and designers to develop an open and decentralized standard for social media. The goal is for Twitter to ultimately be a client for this standard. Much respect to Jack. We'll be breaking down this full story in today's episode. Also, in today's show, why the Bitcoin price is headed to a 7-month low if the $7,000 support breaks. And if we check out the crypto market, you can see we're currently trading just above $7,200. There's definitely a bearish sentiment in the market. In today's episode, we'll be doing a Bitcoin price action, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day, so be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And to help celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free. For full details, smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's dive right into today's top story. Jack Dorsey, founder, CEO of Twitter and payments operator Square, which, by the way, is also very Bitcoin friendly, has revealed that Twitter is funding a dedicated team to develop a decentralized standard for social media. In a series of tweets on December 11th, Dorsey set forth a number of challenges social media networks face in their operations. These include the shift away from content hosting and removal to recommendation algorithms directing users' attention, and content that sparks controversy and outrage rather than healthy and informative conversations. Let's check out Jack's tweets. I read the first one in the intro, so let's check out some of the replies he had. Twitter was so open early on that many saw its potential to be a decentralized internet standard like SMTP email protocol for a variety of reasons, all reasonable at the time. We took a different path and increasingly centralized Twitter, but a lot has changed over the years. And some more responses. First, we're facing entirely new challenges centralized solutions are struggling to meet. For instance, centralized enforcement of global policy to address abuse and misleading information is unlikely to scale over the long term without placing far too much burden on people. Second, the value of social media is shifting away from content hosting and removal and towards recommendation algorithms, directing one's attention. Unfortunately, these algorithms are typically proprietary and one can't choose to build alternatives yet. And he added, third, existing social media incentives frequently lead to attention being focused on content and conversation that sparks controversy and outrage rather than conversation which informs and promotes health. And finally, new technologies have emerged to make a decentralized approach more viable. Blockchain points to a series of decentralized solutions for open and durable hosting, governance, and even monetization. Much work to be done, but the fundamentals are there. And some of these issues were emphasized in a blog post following his Senate hearing titled Optimizing for Engagement, Understanding the Use of Persuasive Technology on Internet Platforms. And I'm going to include all these resource links in the show notes below this video for you to check them out for yourself. And recently, we came across MMA Nick's article Protocols, Not Platforms, which captures a number of the challenges and solutions, but more importantly, it reminded us of a credible path forward, hire folks to develop a standard in the open. And he also added, Square's doing exactly this for Bitcoin with Square Crypto. For social media, we'd like this team to either find an existing decentralized standard they can help move forward, or failing that, create one from scratch. That's the only direction we at Twitter Inc. will provide. And why is this good for Twitter? It will allow us to access and contribute to a much larger corpus of public conversation, focus our efforts on building open recommendation algorithms which promote healthy conversation, and will focus us to be far more innovative than in the past. There's many challenges to make this work that Twitter would feel right becoming a client of the standard, which is why the work must be done transparently in the open, not owned by any single private corporation, furthering the open and decentralized principles of the internet. I gotta hand it to him. Much respect to Jack for going through with a decentralized platform. He also added, we'd expect this team to not only develop a decentralized standard for social media, but to also build open community around it. That sounds pretty awesome. Inclusive of companies and organizations, researchers, civil society leaders, all who are thinking deeply about the consequences, positive and negative. This isn't going to happen overnight. It will take many years to develop a sound, scalable, and usable decentralized standard for social media that paves the path to solving the challenges listed above. Our commitment is to fund this work to that point and beyond. We're calling this team Blue Sky. Our CTO will be running a point to find the lead, who will then hire and direct the rest of the team. Please follow DM Blue Sky if you're interested in learning more or joining. Now let's check out some of the popular responses to this series of tweets from Jack Dorsey. My boy Anthony Pompliano responded saying, "This is incredible work, Jack. You won't get enough credit for pushing the pace of innovation. So from all of us, simply thank you." And that's exactly my sentiment of how I feel right now. What are your thoughts? Let me know in the comments below. This deserves a retweet. Gaber Gerbax responded to Jack, "Disrupting the centralized social media model is the only way to stay relevant in the future of social media. Good thinking and investing, Jack." And I agree 100%. Firefox responded, "We have thousands of open source architects, engineers, and designers who have been contributing to decentralization and building community over the past 15 years. It's safe to say we're extremely invested in the free and open internet, so we're here to help. Shout out to Firefox." Jack Dorsey replied, "The team will have to change to choose whatever is best, be that what exists today or start from scratch." And let's check out one more reply, this one from Jake, who said, "Very exciting news. Thank you for making both Twitter and Square into role models for how companies can use decentralization responsibility and effectively. Hopefully others in similar situations will learn from your example." Touche, much respect to Jack Dorsey. And checking out some of the top cryptocurrencies, we can see the bearish sentiment in the market as most of the major cryptos are in the red. Bitcoin is down 1.1%, trading at just below $7,200. Ethereum down 1.9%, trading at $143. XRP down 0.88%, trading at 22 cents. Miss Litecoin down 1.3%. Trading at $43. BNB coin down 1.6%, trading at $14.90. We have Link in the blood red down 7%, trading at $2.08, and EOS down 1.5%, trading at $2.57. And in other crypto news, why the Bitcoin price is headed to a 7-month low if $7,000 support fails. Let's break this down. Bitcoin appears to be bearish on the 1 hour to the weekly time frame, and bearing quickly day trades, the price action leans towards bears and pales in comparison to what is happening with altcoins. Interestingly, despite Bitcoin's bearish bias, Bitfinex longs have increased significantly, 56%, since November 22nd, and this shows that many traders believe the decrease in selling pressure and the last major drop to 6,500 on November 25th was the bottom. The current price action suggests otherwise, and savvy traders will recall what usually happens when either long or short positions skyrocket. In the event that Bitcoin falls below $7,080 and $6,800, many analysts expect the price to drop to $6,500, where the price made a local bottom on November 25th. This would place Bitcoin price at the lower descending channel trend line. However, the volume profile visible range shows a lack of support in this area. In the daily time frame, the moving average convergence divergence histogram shows momentum beginning to wane, and the signal line has flattened as the price is pinched between $7,150 and $7,300. Willy Woo's Bitcoin NVT signal shows Bitcoin's realized price at $5,619, just a hair away from the $5,530 high volume node of the VPVR and $89 away from Bitcoin's realized value at $5,619, as you can see right here on this graph. And regarding Bitcoin short-term price action, the digital asset continues to post lower highs and is capped below the 12-period exponential moving average EMA. The $7,300 level is proving to be a tough resistance to overcome, and currently 7,150 and 7,080 are acting as support. If Bitcoin fails to hold these levels, the next expected step is to drop to $6,800. Before opening a position, traders should look for the price to cross above the 12 EMA and previous lower highs at $7,400. The current cryptocurrency market cap is $196 billion, with $60 billion in volume traded in the last 24 hours, and the current BTC dominance is 66.6%. And taking a look at the top gainers in the past 24 hours, Cosmos leading the pack up 10%, trading at $4.06. Waves is up 8.9%, trading at 61 cents. Engine Coin up 8%, trading at 8.8 cents. Theta is up 7.4%, trading at 8.4 cents. Steam is up 6%, trading at 14 cents. And Centrality up 5.9%, trading at 13 cents. And taking a look at the biggest losers, Matic Network leading the pack once again, down 14%. This has been dumping significantly as of recent and trading at 1.6 cents. Raven Coin down 7%, trading at 2.4 cents. Enigma down 6%, trading at 45 cents. Fetch down 6%, trading at 5 cents. And Chainlink down 5%, trading at $2.12. And Zilliqua down 4.6%, trading at 0.005. And checking out the BitMEX margins, we can see the bulls are back in control, but barely. It's so divided. I started and the bears were in control, and now it's like almost equal. But as you can see, shorts are 49.93% versus 50.07% longs. Are you bullish or bearish on Bitcoin? Let me know in the comments right down below. And checking out the Crypto Greed and Fear Index, right now we're in extreme fear, rated a 23. Yesterday was extreme fear with a 20, and last week was fear with a 29. If you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a buying opportunity, and when investors are getting too greedy, that means the market is due for a correction. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me through this crypto and Bitcoin matrix. There's the red pill and there's the blue pill. Choose the red pill, you will see how deep this crypto hole truly goes. If you choose the blue pill, you will wake up in Wonderland and forget everything you think you know about this world. The choice is yours, my friend. I already know. I chose the red pill long ago. Let me know what you choose down below. And if you got value out of today's video, be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And before I go, I want to give a special thanks to our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world. To help celebrate the launch of our podcast, they're giving away $25 worth of CMDX tokens absolutely free. For full details, click that link right below the video in the description. And I look forward to seeing you on tomorrow's episode. Peace.